What's up, sons? It's Blind Rod with Son of a Tech once again, and welcome to the Crypto Mining Morning Show. Barely getting it in for the Central Standard Time morning at 11:45 a.m. or 11:40 a.m. as it sits right now. Today we're going to talk a little bit about, how you guys are feeling about the market, the bear market, what my thoughts are on it, at least with my limited knowledge within the market and past experiences will primarily be kind of talked about today regarding that. It'll be based off of kind of a starter point with a CoinDesk article, and that'll be kind of the final topic of the day before we get into mining profitability. Probably coincide with mining profitability. I am sitting today. I have some problems with my big toe, and it's every time I stand, it seems to be causing a lot of issues. So I'm gonna sit today. It's a little weird. I feel a little awkward, so excuse me if I seem a little off. I think just changing positions can kind of change my attitude, and I think that that's something that's, normal for everybody. But just a note, we're also going to talk about two miner releases. We got a new one from LOLMiner and a new one from Team Black Miner. Jack Dorsey, this is a new article that I found kind of on my way home from the doctor, actually in the driveway, but you know what I mean. He's starting a new ASIC mining manufacturing company, it seems like, or at least they're hiring for that. That's going to be really interesting. Could be some really cool stuff going on there. We also have the ASUS line of the RX 6500 XT pricing confirmed. Unfortunately, it looks like it will be more expensive than initially anticipated, the retail. So we're going to talk about that. And then we have the first halving for Ravencoin coming up in like a day. Maybe even less than a day now. I'd have to go check the exact time. But we have that coming up, and Bitsby Trippin's been talking about it on Twitter. He did make it into an article on Yahoo Finance, so we're going to be covering that article. Kudos to Bits. Carter over there getting that recognition that he deserves as far as being able to explain it all to, a wider audience, which is awesome. So that's kind of good news for Ravencoin. And then, like I said, mining profitability, we're going to kind of dive into that a little bit, just go over kind of more top-down looking at it as a whole, not so much like looking for individual reasons, and then what possible strategies there are, some ideas for videos that I'm going to be coming out with here shortly, because we're going to have to talk about mining farm survivability, like in my case, for example. And whether or not I'm buying GPUs. Hint, I am still buying GPUs. Should I be buying GPUs though? Right? We're going to kind of go over that sort of stuff. But before we do, we're going to go into today's ad, and it's yours truly. Today's sponsor is myself. To support the channel, click the join button below the video and you will get access to our privately hosted RocketChat. Selecting the $1.99 option will get you access, and after that you need to head over to the membership tab, scroll down, and expand out your membership perks. Find the section for connecting on social media, and in that section there will be a secret registration URL to join RocketChat, where you can sign up to enjoy talking with other cryptocurrency enthusiasts and miners without spammers, scammers, or bots. Welcome back. So thanks for walking through the ad today. Join if you guys can. Obviously only spend what you feel like you can. It's $1.99. You get access to the RocketChat, and you can cancel the membership after that. Let's go ahead and hop into LOLMiner version 1.2. So this was released 3 hours ago, and here are the feature updates. Reduced TON pool job polling intervals by default. This will reduce stale shares and rejected on pool. Rejected shares. Well, I'll add shares in there so it's clarified. So it's supposed to reduce stale and rejected shares on the pool. Additionally, the pool connection module will now take statistics about the duration each request takes. In case the requests take too long, the miner will make the request interval larger internally to ensure enough capacity is left on the line, for example, to submit shares. Added TON solo mining mode. Use the pool solo switch or the TON mode 5 to use it. In this mode, the miner will get giver seeds and difficulty from the contracts directly from the public API and submit a found solution directly to the giver to pay you. During this mode, the pool hash rate and the best statistics, share statistics, will show data based on an internal difficulty of about 4.4 terahash. Every submitted share is equal to a submitted challenge solution to the network. Note that to solve a challenge per day at the moment, about 300 gigahash are required. Also note you need sufficient internet connection. The amount of polls to the givers is higher than that for a usual pool connection. They added the ability to lock the memory clock on the RTX 3000 series, and you can use the parameter mclock to do so. That's pretty nice to see, of course. If you're a miner, you're already probably utilizing something like HiveOS or other overclocking tools, and maybe not necessary, but I guess it's kind of neat. Made the horizontal stats standard. You can get back the old version by using the vstats parameter set. Here's the fixes. They fixed a bug in TON solver backends that rarely cause double defect shares to appear. Fixed a bug in statistics causing GPU number not to be right aligned in classical vertical stats, and fixed some general issues where TON pools did not get connected. So there you go. Let's go ahead and talk about the Team Black Miner version 1.37. This was launched 2 days ago. And here are the fixes. They fixed shares per minute calculation, fixed invalid shares after reconnecting to pool, crazy pool, 2 miners, and perhaps others, it says. Improved DAG creation parallelization on NVIDIA multi-card rigs, fixed the DAG intensity on the P104 GPUs, which we'll be talking about here in a second, and removed invalid shares on the Hive on pool. All right, so let's go ahead and basically, I guess, address a couple things. Obviously, if you guys want to continue to support the channel and leave the membership on, it's much appreciated. Definitely, with the threat of a bear market, it is definitely more appreciated than ever, of course. And don't forget to stay calm, mine on. You can find the links to the shirt down below in the description. That being said, it should be added to the YouTube purchase option here soon. We still have, of course, I bought your GPU, and that's going to remain relevant. Why is that going to remain relevant? Well, because while crypto is going down, the price of GPUs is not. And that is confirmed by ASUS, who confirms the AMD Radeon RX 6500 XT 4GB graphics card will have a starting price of 299 euros and 334 euros for the Tough Gaming custom models. Looks like ASUS has just confirmed a pricing rumor that appeared last week around the AMD RX 6500 XT models. Despite all claims of hitting the street at MSRP, ASUS has blown away AMD's promise of having the Radeon RX 6500 XT at $199 US, and instead given a €299 starting price for their custom models that will be available on the 19th of January. According to ASUS, it is reported that the ASUS Radeon RX 6500 XT Dual at entry level will launch at €299, while the more premium Tough variant will cost up to €334. This is more than 50% of the recommended retail price disclosed by AMD itself, and shows that those finally expecting an entry-level solution for their budget PC builds are in for a disappointment. Furthermore, it was also stated that the graphics cards will be available in good quantities through the pricing, though the pricing makes it seem like they could also be very well just fake news. Furthermore, these prices Or just for base variants, and overclock models of each variant will cost even higher. Based on these prices, we can expect cards to actually retail around $350 and up to $400, which is more expensive than the RX 484 gigabyte, which actually launched at $199 and had good inventory on launch day back in 2016. Earlier, it was reported that the AMD RX 6500 XT will have a price of 299 euros in France, including taxes, and then they just go over the same increase, blah, blah, blah. Now, from the miner's perspective, we are looking forward to the new core manufacturing process, 5 nanometer, and hopefully that will show improvements in hash rate on things like Flux, maybe Ton. That being said, I don't see these dropping into the hands of miners really quickly, especially with the market being down. What I do want to segue into here, just so that people are aware, right now you can start getting GPUs at retail for prices that basically correlate to about $15 per mega hash. I'm on a few different Facebook mining groups as far as selling. I've seen it on Twitter. People are starting to sell off their mining rigs. Their only problem is they're trying to sell off their mining rigs at inflated prices. You should not be paying more than $15 per mega hash at this time. Now you can translate that over into solutions a second for, of course, the light hash rate GPUs. But for light hash rate GPUs, I think you dump that down to $10 to $12 per mega hash. Personally, that's what I would be looking at. That being said, there could be a couple outliers that I may pay more for, i.e. a 3080 Ti that does 110 solutions a second. I may consider paying that standard kind of $15 per mega hash on that one. So just stay frosty. You can. There's been plenty of Best Buy drops and plenty of Newegg drops for the RX 6600 for under $500. We're talking about $480 to $520 at the top is what I'm seeing for these drops. They are staying in stock long enough for you to purchase them, and they translate to $15 a mega hash. The other bonus to that is that they are the most efficient, one of the most efficient GPUs out right now outside of the A2000. Meaning that the $15 per mega hash that you can buy at retail pretty easily right now, they're starting to drop, is even better because of its efficiency compared to the $15 per mega hash that you would pay on a used GPU, anything else pretty much, right? So don't get swayed into purchasing for more than that, please, at this point. If you are trying to sell a rig, recognize the market, recognize that $15 would be per mega hash, $15 per mega hash would be premium, and that also miners aren't necessarily that interested in paying exactly what you paid for your risers and your motherboards. Most of the time, that shouldn't even be calculated into the price at this point for the mining rig. In my humble opinion, I wouldn't pay for it. I don't care about the motherboards and stuff. You know, there is some value there, you could maybe argue, but definitely not like the huge $500, $600, $700, that sort of thing. That being said, the power supplies could be, a good tick up depending on what PSUs you got. But if you just got like 750 watts powering all of your 3090s, then no. And if they're not platinum rated, probably, like from a farm perspective, I'm probably not interested in purchasing a rig and then just having a whole bunch of like gold rated power supplies laying around that I'm never going to use. Especially as the market gets tougher and tougher and tighter, those platinum rated power supplies are going to be the ones that are coming in and saving your lunch money, right? That's what we're talking about here. So just be realistic about what you think you can get. If you want to sell fast, you're probably looking at like $10 to $12 a mega hash just in general. And then we'll talk about whether or not you should sell or not here in a little bit. Let's go ahead and talk about Jack Dorsey's new Bitcoin mining ASIC. Let's do it. All right. So this was posted an hour ago on Bitcoin Magazine. The title is Jack Dorsey's block is hiring to develop next-gen Bitcoin mining ASIC. In a recent job posting by Jack Dorsey's block, they are looking to hire a team dedicated to launching the next generation of Bitcoin mining ASIC. An ASIC, which is an application-specific integrated circuit, is a microchip that is custom designed for particular uses, rather than one intended for general purpose use. In this case, Block is setting out to build an ASIC that is purpose-built solely for Bitcoin mining. In a tweet thread published on October 2021, Jack Dorsey outlined some core questions hinting at what Block's future development of a Bitcoin mining system might look like. In his thread, he laid out the following 5 topics for further exploration. Number 1, distribution of miners. An important note, not all distributed networks are the same. Distributed systems are measured on a spectrum, and networks like Bitcoin have varying degrees of distribution found within them. For example, a network can be distributed amongst 3 peers, or it can be distributed amongst 100,000 peers. The more peers in the system, the less reliant the network's participants are on any small group of participants to securely settle transactions, as Dorsey stated. Number 2, increased mining efficiency. Dorsey states that, quote, driving towards clean and efficient energy use is great for Bitcoin's economics, impact, and scalability, end quote. This is something that has been a core part of Block's stance since April of 2021 when they co-published a white paper with ARK Invest entitled, quote, Bitcoin is key to an abundant, clean energy future, end quote. In their research, they explain how Bitcoin offers a unique opportunity for the energy industry by acting as an energy buyer of last resort. Setting a global price floor for energy allows us to build out more robust, clean energy infrastructure with the assurance that any excess energy harnessed in off-peak hours will still have a buyer. And that's actually a really interesting point, because you have like energy waste, etc., but you can push those off, and Bitcoin mining is 24/7. It makes sense. It does make sense. The state of silicon production, number 3. Silicon design is a highly expensive long-term capital investment which creates a high barrier to entry for the industry. Having a small, highly concentrated set of suppliers means limited production and constraints on supply. In his tweet, Dorsey states that he believes combining the silicon design process would be best if coupled closely with software and system design, end quote. Vertical integration, number 4. Dorsey believes that not enough companies are focusing on vertical integration. Vertical integration is where multiple stages of the supply chain production process are integrated and wholly owned by a single company. This all-inclusive process removes the reliance on external production factors that could create constraints and uncertainty in the overall production process. Now, this is actually a really important point, because what it's coming down to is basically talking about how you have like AMD and NVIDIA needing the manufacturing to be done by like TSMC for their core, and then of course like Samsung or Micron or Hynix or someone along those lines for the memory. This does make sense. I think also to the point of the state of the silicon production, one thing that could be interesting is starting a silicon company with Bitcoin mining, and then being able to use that profit into building, silicon for other applications or general purpose applications, which is kind of the business strategy I would probably go with, if I ever had the kind of capital to do anything, would be, pick an application specific integrated circuit, use that to build up the silicon manufacturing process that I'm going to have, and then bleed that out later into general purpose once you've actually had something that's generating revenue for a very specific purpose. Now, this actually is a great lesson for almost anything you do in life. Just a quick note here, but something like starting a YouTube channel, for example, the more narrowed down you can get that topic in the beginning, and the more of an audience you will be wanting to come to your channel because you're the only one with that specific information. This could also go with, a business. If you're starting a business, take it down to the, base level of like what you want to do, and find a niche, and then serve that niche really well, and then start to grow that niche out, right? Then you can start, right? For example, this channel starting with mining and then growing into more of like some NFT stuff or whatever it may be, right? It's that idea of being really successful in a niche and then using that to grow into other things. I think that from the silicon production point of view would kind of make sense with ASICs just in general. I think that could be a pretty good business plan there. So finally, 5, mining accessibility. While the popularity of building home mining setups has certainly been on the rise throughout the last year, Bitcoin ASICs still have a long way to go before they can be considered simple plug and play tech. Dorsey states that we need more incentive to overcome the complexity of Bitcoin mining in order to make it accessible. Hopefully one day mining Bitcoin at home will be as simple as plugging in your toaster. I feel like it kind of already is, but we'll talk about this. In the future, engineers may build more solutions for upcycling the heat from home mining systems and integrate it directly with existing home utilities like HVAC or water systems. So this is a big one. And, there have been like the guys that have, showed how they heat their house with Bitcoin miners, etc. But in integrating the heat generation from Bitcoin mining to power other utilities within your house is going to be something that is, I think super beneficial to everybody. And then if you compound that with like installing solar on your house, etc., you could have really, really good distribution of Bitcoin mining where everybody is participating, and we kind of get away from these big farms and we move back into more decentralization. Now, as a miner, obviously, when we look at these things, we're always thinking about buying more rigs and, more GPUs or more ASICs, and then building that up and then trying to have our own farm, that sort of thing. I understand that. That's literally what this channel talks about all the time. That being said, if we're talking from an idealistic standpoint of like what Bitcoin's supposed to solve in a principled standpoint, and then we take a look at like what the original white paper had us talking about as far as, one CPU, one vote, really the idea of integrating Bitcoin mining into your utilities at each individual house, where you get some sort of financial benefit and it distributes further across everybody. That's where we need to move to for like Web 3.0 to be fully realized, full on decentralization, that sort of thing. That's going to be a lot more important, in my humble opinion, for the future of cryptocurrency than even like where we sit right now with it, right? Whether or not we, move to, proof of work, right? Or proof of stake. So I would actually argue that moving this direction is more decentralized, obviously, than than even current proof of work state, and much better than moving towards proof of stake. And I think like as a miner, I realize that will like potentially like reduce my ability to perform within the ecosystem, or perform well and keep it as like a main job deal sort of thing, right? Business. Unless of course you can figure out how to like integrate into these realms, right? And I find that concept super intriguing, and I back it 100% personally, because that's what I would like to see crypto do personally. Let's talk about the first halving of Ravencoin. So first ever halving event for Ravencoin. This was posted at 6:39 a.m. and it was posted on Yahoo Finance. Ravencoin is rapidly approaching its first ever mining reward halving event set for 1448 UTC on January 11th. So that will be tomorrow. I don't know exactly what time that will be. I'd have to go convert UTC, but Ravencoin is an impressive community-led project that forked off Bitcoin in 2018 with the rare promise of a fully fair launch that included no pre-sale or ICO. Originally receiving backing from Matic Ventures, the community launched the Ravencoin Foundation to guide the project's future from within the community in 2020. Driven by network-native Raven token, the open-source proof-of-work project operates similarly to Ethereum and ERC20 through the use case of token issuance. However, it remains truly highly decentralized, ideals boasting an ASIC-resistant hash rate, says X16R. I think it's Kapow now. It's gone through a couple revisions of the X16R. So I think as far as I don't know if they need to update their white paper, and like the researcher for Yahoo kind of didn't catch that, but you know, it does protect everyday GPU miners. So here is an important point for Ravencoin that I think sets it apart from literally everything else, other than I guess we could say Bitcoin. Well, and I'll tell you why the distinction is important as well. So the importance of Bitcoin is a limited supply with an emissions reduction, emissions reduction over time, to the point to where once all of the coins have been mined, there should be enough adoption, right, the year 2140, that miners themselves will still benefit from the process of mining based purely on fees. The other important notes about Bitcoin that set it apart is, of course, no emissions, no pre-mine, no pre-sale, no ICO, these sorts of things. So there aren't governing entities that are highly invested in the short-term performance of the asset. The things that needed to be adopted into a smart contract token-based coin, right, would be that at this point there is none that has no emissions or no ICO, no pre-mine, etc., except for, of course, Ravencoin. And where Ravencoin sets itself apart from Bitcoin is, like I said, specifically these tokens, right? The token-based system, the ability to, issue smart contracts, etc. However, as opposed to Ethereum, it doesn't have these pre-mines, or the ICO. It doesn't have this governing body that is invested in and needs like short-term gains. And we'll talk about this too with Ergo. I do have more information on Ergo, and I did want to touch on that. It's a little hard. We are just flooded with a ton of news. So overall concepts is kind of what I'm also trying to stick to, so that you guys get an understanding. When you look at another project, you can say, okay, I understand why this is, along the lines of financial freedom, while this is just kind of going down the same path that we always have with fiat and so on and so forth. So, let's go ahead and get into more. Speaking to CoinRivet, Tron Black, Ravencoin's lead developer and co-founder, outlined the reasons for the halving. The first Ravencoin halving is when the software begins making Raven more rare by reducing supply, he explained. The halving is the opposite of money printing induced inflation. This is the first and largest Raven supply cut in Ravencoin's history. The second Ravencoin halving will be in 2026. Markets tentatively excited ahead of Raven halving. The markets have seen tentative price action in response, with an anticipation and excitement about the event driving a 13% rally on January 3rd. Typically, halving events can drive substantial rallies. Indeed, the Bitcoin bull run in 2021 is credited to the halving event. And similarly, a Vertcoin halving event last year posted a 30% pump. So here's the issue with Ravencoin in general, as far as like once we start trying to do price prediction, etc., is going to be, of course, its strong tie to Bitcoin pairings and other coin pairings that will make it more and more difficult for it to price pump. The other note to that is they don't have a ton of KYC accepted exchanges that allow for easy deposit and liquidation and so on. And this is kind of a weird point when we're talking about mining it and the miner's effect on the price. So primarily the Bitcoin super cycle that they're referring to, where Bitcoin goes into a halving and then the price goes up. This we've talked about a lot before. That's across any halving, obviously with Vertcoin and so on. It's just more impactful on Bitcoin because Bitcoin is, well, Bitcoin, right? It's the most popular, etc. Will that translate directly into the exact same increases that we saw on Bitcoin into Ravencoin? Not necessarily. But Bits does have a good tweet here to go ahead and cover. So he did cover this in a 6-part. It kind of reiterates what I was trying to relay within the Ravencoin price prediction. And so we'll kind of go over this, and definitely go follow him if you have not yet at this point. But in just under 1 day, 9 hours, Ravencoin will complete its first halving event. This is built-in feature inherited from Bitcoin Core and halves the inflation rate over a schedule up until the network completes its fixed supply distribution. The first Bitcoin halving, which occurred on November 28th, 2012, saw an increase from $12 to $1,207, 100.5x on November 28th, 2013, in the first year after the halving. The physical change in distribution does have a real effect on supply and demand. The second Bitcoin halving occurred on July 9th, 2016. The price at the halving was $647, and on December 15th, 2017, Bitcoin's price had soared to $19,345. Raven's second halving will occur around January 12th, 2026. Even if Ravencoin performed half as good, it would hit $8.15 by then. This data was pulled from Ravencoin's Reddit by Chief of Stonks 7. So thanks for compiling the BTC price data, my dude. Looking at what Tron Black, Mango Farm Assets, and Atom Assets and others have built, Raven and its tools have been amazing. NFTs, layer 1 asset transfer layers, and more. These networks and their scarcity-based limited supplies build on fundamentals of supply and demand, coupled with degen speculative trade activity, which in the days of Wall Street bets, Gen Z, Y, millennial finance, you're a viral TikTok or forum post from serious price discovery. Cheers to the builders, the future devs, GPU miners securing the network, and all cryptocurrency fam out there keeping the spirit of decentralized finance and freedom, independence of global crypto networks. Here's to a great 2022 and good things for the network. So basically he's reiterating what we talked about, which is the pricing or the price influence of halvings. One of the big things, what I want to bring up. So the reason why the price will inevitably be impacted by the halving is that the miners can't take a loss on their equipment. And so depending on like the averages of the power cost for the Ravencoin miners versus, of course, how many coins they're taking in will directly reflect whatever their sell price will be. And because the miners are the ones minting the new coins, the new coins that are coming into the system, they naturally have a large influence over how much the price of the total supply will be or whatever, right? Provided, of course, that there hasn't been some significant increase in inflation or some huge impact on the coin's network in a negative manner, right? Where it goes down or isn't working properly, so on and so forth. So, do I think that the price of Ravencoin will go up? Well, yes, if we were in a traditional, or not a traditional market cycle. Well, we'll talk about this in just a second. If we weren't headed to a bear market, which is where we kind of have to talk about what starts happening to these smaller coins if we are heading into a bear market, and that's going to have an influence on the price of all the other coins. So kind of let's get into that, and we'll wrap back to Ravencoin. And there's a lot, like I said, a lot to go over today. So thanks everybody in chat for being here. I know that we got a ton to go through, so I definitely want to check all the chat here a little bit later. And then thanks for the $9.99 super chat, Brad. Let's talk about Bitcoin falling below 40K as the death cross looms per CoinDesk. And I'm going to get the Bitcoin current price up right now is 41,262. So we have gone back up. We are kind of crawling back up. So not all doom and gloom today, but let's go ahead and talk about it. So this was posted at 2 a.m. Central Time, and it says they call it Bitcoin's, quote, death cross, end quote. A bearish indicator which appears when the 50-day moving average dips below the 200-day moving average. The ominously named chart pattern looks set to be confirmed this week amid mounting concerns of faster liquidity withdrawal by the U.S. Federal Reserve, a bearish development for Bitcoin and asset prices in general. On Monday, the Bitcoin price fell below 40,000 for the first time since September of 2021. As of press time, the largest cryptocurrency was changing hands at $39,853 based on CoinDesk pricing, down 12% so far in 2022, one of Bitcoin's worst ever starts to a year. And this is one thing that I noticed that does seem weird. And I said this, I tweeted this out. Make sure you guys follow me on Twitter at SonOfATech if you want to catch any of the random thoughts I get. But one of the things that I was saying was typically you see, no matter what, every January and February an increase in price. So this is kind of outside of the norm. What we should see or expect in a traditional super cycle is that we would have a dip this year, but that wouldn't come till like February, end of February, mid to end February, and then like March, and then we would just keep going down, 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 and then we kind of level out like at a bottom, and then we would, and for like a winter type thing, and then we would hit the bear on the next halving. In this particular case, right, what we've seen is basically ever since Christmas, kind of like a steady downward spiral within the price of cryptocurrencies in general. Specifically, the one that we care most about is going to be Bitcoin because it influences the rest. And that means that kind of there is the possibility, which I find curious, of us actually having broke out of the traditional super cycle. And while that does mean that we could hit a bear market at any time, it also means that we could possibly hit a bull market on any time, at least from my perspective. Like, we aren't seeing the traditional moves from Bitcoin when it comes to its traditional super cycle. And that could actually end up meaning that this is a positive thing as opposed to a negative thing. However, if we do remain within the kind of Bitcoin super cycle, I would assume that we would see a pump here through February and then we'd come back down. If we've already started the bear run and that sort of thing, well, I'll talk about my predictions here in a little bit and what I would expect to see in pricing. But let's go ahead and get through this. Thanks, everybody that's joining the Rocket Chat. You guys rock. So I'll give shout outs there. PG Mullins and Fudweiser. Welcome to the Soats. Well, welcome to the Soat Goats. There we go. Whatever. On YouTube. There we go. All right, so the Wall Street firm Goldman Sachs foresees the Fed raising borrowing costs at least 4 times by the end of 2022 versus the previous prediction of 3 rate hikes, according to Bloomberg. The investment banking giant also expects the central bank to downsize its balance sheet from July. Friday's U.S. labor market report, which showed that unemployment rate dipped to 3.9%, has strengthened the case for the Fed to hike rates concurrently with the end of asset purchases in March. According to the CME Group's FedWatch tool, investors were pricing a 73% probability of a 25 basis point rate hike in March, up from 61% last week. Fears of hawkish Fed gripped the Bitcoin market towards the end of last quarter after the central bank shifted its focus to inflation control from maximum employment. In December, the Fed announced at least 3 rate hikes by the end of 2022 and an end of the asset purchase program by March. Bitcoin peaked near $69,000 on November 10th and has declined nearly 40% since. The cryptocurrency slipped over 12% in the last 7 days to January 9th, registering its biggest weekly drop since early December. The impending death cross, coupled with the souring macro outlook, may bolster overall bearish sentiment. That said, the technical indicators past record as a predictor of bear markets is mixed. According to research by Kraken, many of Bitcoin's previous death crosses, including those seen in 2014 and 2018, coincided with either a sell-off in the days that followed or a continued macro downtrend that confirmed a bear market. However, death crosses witnessed in June of 2021, late March of 2020, and October of 2019 were bear traps or false signals that marked major price bottoms. The consolidation seen after the mid-June 2021 death cross resolved in a fresh bull run, as seen in the featured image. Moving average crossovers are unreliable as standalone indicators, given they are based on backward-looking data and tend to lag in prices. The market is often oversold and due for a bounce by the time the crossover is confirmed, as was the case in June of last year and late March of 2020. So the question is, are we in a bear market or are we not? And then are we going to see a quick bull run? I think if we see a quick bull run, this is not financial advice, just kind of, if I'm going to predict it off a Bitcoin super cycle, then I would assume it would happen within the next couple weeks. It would continue through February. And then if we're going to follow the super cycle, we would have basically a bear market in March that would start in March. Now, we may have completely broken all of this, and that's not even a thing anymore, primarily because, well, obviously the Fed is in it. Institutional investment is in it. And we have obviously an inflation issue, which is why the Fed's responding like they currently are, and a lot of different factors that change everything compared to what we've seen in the past. So are we in a bear market right now? I guess arguably we could say we are, because we've been continually going down, but will that last for the whole 2 years that we traditionally see? No. Now, there is obviously the whole, manipulated market. And because institutional investors and the federal government are into it in general, it's going to be manipulated. That being said, because of the nature of Bitcoin, you should look up what's known as the Trojan horse theory for Bitcoin, which is essentially that as long as you're buying Bitcoin, as an individual, while the price of it in relation to USD is going to go up and down, the more the Fed and the more the banking and the more the institutional investors try to manipulate it, the higher over time they're just going to drive the price. It's inevitable because of the supply cap and the reduction of emissions. So in general, what ends up happening is that they are trying to manipulate the very thing that's going to eventually stop them from manipulating the everyday Joe's finances, at least in theory. Will that come to fruition? I don't know. I have high hopes that it would, because that's what I want to see. That was the purpose of it. But, you know, things could change. What I wouldn't suggest off the bat is putting all of your money into cryptocurrency right now. Of course, you want to buy when it's down and whatever, but right now I have no idea where it's going to go. Like I said, it's kind of broken out of the cycle. It's all over the place. We have all these factors that are going in. I'm going to stay heavily invested into cryptocurrency in general, personally. So if you want to know what I'm doing, I am buying more graphics cards. Let's talk about mining profitability, other coins and stuff like that now. It's a little wild. So let's go ahead and do it. We're going to hop into, of course, first of all, our profitability on Ethereum. Now, this is just my test bench. It's offline because it's really loud and it's right back here. We had a 3090 that was having some issues right there. And the 3090 was like hashing, and then dropping off. I had recently purchased it, hopped in, just a quick note, kind of funny. I was like, this is weird. I bought it used. So I plugged it up, pulled the BIOS. The BIOS was for the EVGA for the Win 3 on the Founders Edition 3090. So I just flashed it back to the Founders Edition, started running it, and it's been running 24/7 ever since. Just an interesting note. So if you guys have something weird going on, check and make sure that the BIOS you have on there is the BIOS that matches the card, and that could possibly be a potential issue, right? So there you go. Now I'm a little down on hash. I will have to go figure out exactly why at some point, but I'm pretty sure it has to do with heat and all that. We are pumping 18 kilowatts in basically what is 1,350 square foot right now. And I have not got ventilation fully sorted. So that's kind of the project for the month. But we are down significantly on the US dollar, down to $245.79 a day. It's getting a little scary, not going to lie. And our estimated earnings in ETH, though, are actually up. We're at 0.081 ETH, especially considering that I've taken 3 rigs off. As you can tell, we only have 12 here. We usually have 15. We've taken 3 rigs off and we've put them on miner pool. Now, miner pool in general, and I'll talk about like 2 of the rigs because we did reconfigure a rig and it's kind of funky. But right now, we haven't found anything in 2 days. Our last one was 3 days ago, and we found another block. So we found 3 blocks in 2 weeks, really 10 days. And that has been primarily on the 450 solutions a second right here. That we're getting off of this light hash rate rig that's named SOAT 3080 Ti, but it has 2 3080 Ti's, 2 3060s, and a 3070 Ti in it. And you can see here that it's had the full block reward attributed to it, essentially the 110 paid out to it. So it's made them all. Now I did add on essentially what are my CPU mining rigs. One has like Threadripper in it and one has the other one. What was it? The 5800X. And I threw the 2080 Ti's in these, and they are just adding to that solo push. So it took about 120 mega hash off of ETH right there. And then we took we rebuilt like a kind of a throw together rig of 1660 supers. So what's really keeping me alive as far as like, I guess, profitability would be the fact that we did make an extra 300 last week. Primarily, you know, actually more than like $360 US last week additional by moving this rig off. Now, if this rig was on Ethereum, for example, with the 3080 Ti's, etc., it would be about 350 mega hash a second. It would have made, you know, I think it's like 5 per 100. So it would have made like $15 for the whole week, or $15 a day. Let me calculate that out. I had this calculated out and I guess it closed. 15 times the, well, let's say the 10, it would have done $150. So it did $200 more by solo mining Flux. We already have a video on this. You can check it out. Is it time to move off of solo mining Flux? And that's going to be something that we need to talk about with like difficulty, etc. Now, in this particular case, because that rig does what it does, I would have to basically not find a block, not find a solo block for 10 days before Ethereum, for 10 days before Flux mining on a pool is more profitable on that rig. Seeing that we found one, 3 in 10 days, we're like way outside that realm. And you can do these calculations. I'll be talking about like doing these calculations later, but of course, difficulty, all that is going to affect it. And there's a huge amount of luck when you're solo mining. So take that for what you will. It is what it is. Let's talk about mining pool profits for Ethereum though while we're here. Last 90 days, Mining Pool Hub in first, Crazy Pool in second, Ethermine in third. Last 60 days, Mining Pool Hub in first, Crazy Pool in second, and Flex Pool in third. Last 30 days, Mining Pool Hub in first with Crazy Pool in second and Flex Pool in third. Last 21 days, Crazy Pool in first with Mining Pool Hub in second and Flex Pool in third. Last 14 days, Crazy Pool in first, Mining Pool Hub in second, and ZET in third. Last 7 days, Mining Pool Hub in first, ZET in second, and Ethermine in third. Last 3 days, Mining Pool Hub in first, 2 miners in second, and Nanopool in third. And for the last day, we had Mining Pool Hub in first with 2 miners in second, and Nanopool in third. Now, we do have the difficulty chart here that is largely unchanged in Ethereum. I was hoping we'd see some more hash drop off of it. That hasn't been the case. If we take a look at Flux, which is kind of the next most profitable, we saw a huge increase on, it's still the same, right? Starting on January 8th and then kind of going all the way back up in hash rate. So it's at 2.7 megasouls. A lot of miners are moving back over to it. I think we were at 1.5, 1.7 last week. So the difficulty rise is going up pretty significantly on Flux. And that means that, it begs the question, what are we going to do as far as moving off of that, moving off of Ethereum if we have to. And it's kind of difficult. Like if we look at the profitability on what to mine, right? It's got like Ethereum's under $5 a day on a 3090. That's super rough. $4.73 a day per 3090 after power cost at 10 cents a kilowatt hour. It's pulling it closer and closer to other coins. Cero, I really honestly haven't seen it be... I haven't researched it yet. Conflux, we have done some research on. There's some worries about China. Equilibria X. Zellhash is actually 110 on the 3090, so that actually does put Flux above Conflux at $3.07 a day after power. If that's, 290 watts. I want to make sure the wattage was up and high. Actually, it'll be, let's calculate it out the same as ETH. Yeah, so 299 or whatever. Ravencoin's way down here at $2.42 a day after power, but you want to keep in mind that may be changing. Now, I know that Bits was experimenting with a single 700 mega hash a second rig on ETH, putting that as solo mining on Ravencoin, and he had some really good luck on Ravencoin solo mining with what is the equivalent of 700 mega hash on ETH. I haven't run the numbers yet. I think he's going to do a video on it. So if he does, go check it out. I'm sure he'll run the numbers for you on what that rig would have done on ETH as opposed to Ravencoin if he wasn't solo mining Ravencoin. We also have Ergo still in here. A lot to talk about with Ergo coming up here shortly. $2.60 a day right now. I'm actually going to pull this up. Let me see if I can do this, because I did get this information just recently. Excuse the noises there. Regarding the soft fork. So I had asked for clearer details to cover on Ergo and their soft fork. So I do have that here. It was posted 3 hours ago by Armenio, and he is basically a community manager, and I talked to him on Telegram. So I got more information here for you guys. We're also going to post this in chat because it looks like nobody's seen it. So there you go. All right. So EIP 27 soft fork proposal. So the intent is soft forking Ergo emission. There are a lot of concerns about the emission being over in less than 6 years from now. The long-term sustainability of the short emission schedule is an inherent risk to the long-term viability of the Ergo network. The UTXO is seeing good growth, but due to the nature of storage rent, which charges a fee on unmoved UTXOs after 4 years, the viability of storage rent economy as a way to protect the long-term economic viability and security of the network is in question. We would like to create a system that offers economic incentives to miners in the short term while protecting the long-term crypto economic security of the network. Now, before we get into this is going to be put to a vote to miners. I'm in talks with GetBlock, which is one of the bigger pools, as well as a few others for this, and we're getting all the information together, but it's going to take a little bit of time before I have all the information. What we have here is clarification on exactly what the soft fork will do. So principles: having unlimited emissions has given ETH tremendous flexibility in playing with its economic policy and network adjustments. Ergo is committed to the principle that the total supply must be preserved. Unfortunately, post non-outsourceable puzzles, the governance scheme has changed. The governance model shifted from a democratic model where individual miners vote to a representative model where mining pools vote. And this is what I kind of brought up initially, which was, and I think basically this entire clarification is a response to the original segment we had on this particular EIP. So I'm glad to see that what I'm reading is direct responses to our concerns. One being, of course, that because Ergo is no longer, one mining rig, one vote, or, one miner, one vote, and like no pools allowed to now pools allowed. If you went with the traditional voting scheme, the mining pools would have all the control and say, and the miners as individuals would not. So I think what they're talking about here is going to be proposing a mechanism that is going to allow individual miners to vote, which at the very least I think is something that I definitely approve of and am glad to see them doing. So I'm glad they're looking at resolutions for that. So we know that is not very efficient form of governance, as a select group of actors has massive representation. We have encouraged mining pools to poll individual miners, and as soon as we hear back from pools, we will be open and transparent about which pools are in favor and which are not. GetBlock, one of our community pools, has created a proof of vote POV voting mechanism, and I'm actually talking to GetBlock right now on this voting mechanism. We will get more information for you this week on how it's going to work exactly. So to know what needs to be done for this to take place, guys, it's going to be a 90% approval rate, which is a super majority. The governance model they are following is modeled on this following paper. Let's go ahead and look at what, so this was right. That's currently what they're on. I think we're aware of that. We've covered that in the WTF is Ergo. Process. So emission and treasury emission are boxes created before the Genesis block and associated with corresponding contracts. This is part of the proof of no pre-mine and the associated monetary policy of the network. It is important to understand that the original emissions contract is still valid. It is simply interacting with a re-emissions contract that is collecting rewards to be used to extend the original emissions. Essentially what you're seeing is a contract on top of a contract to basically pull a portion of the block reward, just to give you guys an idea, to pull a portion of the block reward and put it into a contract that will then pay out miners for a longer period of time as opposed to it ending in 2026. Now, do I want to tell you? I do. I will tell you guys why I think this almost has to happen, and then we'll go from there. And one of the things I didn't realize really initially on, and I think we had even covered it though, was exactly how short of an emission cycle Ergo initially had, which is about like eight years, ending in 2026, or was it 6 years? 6 years. Anyways, 6 years, 8 years, really short. For example, like for comparison, Bitcoin doesn't end its emissions schedule until 2140. And so what does that mean? What has to happen on the network for that to be sustainable after 6 years? In 2026, what needs to be happening with the network for miners to be incentivized to continue to mine? And here's where we kind of like understand why this starts to be a thing, if you ask me. Yes, they're talking about storage fees, but one of the things that is true is if nobody's using the platform, then there will be no fees for the miners to collect in 6 years. And then based on the amount of miners, you know, that cut gets lower and lower. And if there's not a base block reward, then you risk essentially losing the security for the network in 6 years if you don't have enough users paying fees to compensate the miners. So I understand the economic problem here and the risk to the network from that perspective alone. And that's kind of what I see as being a huge problem just in general. Now, what I would have hoped for is that this would have been recognized either earlier on or at the very beginning of the project of like, oh yeah, like we have to have this amount of users before it's viable for us to only be paying miners out via like fees essentially, as opposed to a block reward. So you kind of can only cut the block reward down when there's enough users to incentivize the miners. And because of the short 6 year time frame on the emission schedule, kind of makes sense that it might not work. Just my thoughts in general. So take that for what you will. Does that mean that you changed the contracts, the emission contracts? That's a hard debate that, you know, I think miners have to have regarding this project, because it's a social contract with the miners essentially saying like, we said that we would give you this much and now we're not. Technically we're going to give it to you later though. I guess it's a little bit better than Ethereum, but it also means that something wasn't modeled right initially is what I feel like, if that makes sense. Which reduces confidence, right? So this EIP offers the following procedure for that to resolve this emissions thing. Starting from block 699,393, first block of the 684th epoch, new emission rules, if approved, would be applied on top of the rules described in the Ergo white paper. Remember, this is not for sure happening. This will be a vote put into the miners, so to us. And hopefully I'm working enough to get this, you know, recognized that we want individual miner votes. And it looks like luckily we've gotten that. So for the community, I'm happy that it does look like we're moving in that direction. The current block reward is 66 ergs. The initial change would drop the mining reward per block by 12 ergs. Subject to approval, the block reward would be 66 minus 12, which is 54 ergs. That's the initial reduction. In simple terms, the initial reduction of 12 ergs is being put into a box where it will pay miners after the initial emission period is complete. So that would be in 2026. So 66 old, 54 new block height, blah, blah, blah. And he goes through the math here. The original emissions hit the zero block at 2,080,800. The proposed re-emission soft fork creates an extended period of block reward at 3 erg. There is an interactive graph available on ergo.watch that models the original emission and proposal. So you can see that here, right? Where you would essentially be going up, up, up. Where is it? Right. There's the emission coming down. Is that right? The chart's not really interactive, is it, right now? It's interactive down here. So a re-emission contract. There. Okay, I'll have to look at reading this specifically, and I will get information on exactly how to read it for you guys, and then try to compare it later. So in the future, it's possible to create a soft fork that requires storage rent to be collected into the re-emission contract to potentially smooth payment and extend the block rewards into the future. ERG cannot be burned in the conventional manner miners are accustomed to due to storage rent. Any future burns can be directed into the re-emission contract, potentially stabilizing the re-emission at 3 ERG. The goal of this proposal is to secure the crypto economic security of the chain long-term to create a sustainable ecosystem that incentivizes miners. This is what I was talking about. This is why they're doing it. I think that what they are seeing on their models is that they will not scale enough to the amount of users they need to compensate the miners enough to continue to secure the network. Therefore, they need some sort of block reward after 2026 to help incentivize miners. And I think that's what we're seeing here, basically. So to give you guys an idea, that seems like exactly why to me. We believe that the governance in a proof of work system should be representative of the opinions of miners. This is a part of why the threshold for soft power is set at 90%. Due to the previous hard fork, the governance model changed, which shifted power to mining pools. This is not ideal, but we will try to be transparent about how to vote. Excuse me. The consensus among miners and those that support our ecosystem is important. Developers have proposed updates in the past that have been rejected. This is a part of governance and decentralized management. If EIP 27 is rejected, we will talk to the community and propose alternatives in the future. All right, so let's talk about this, because this is a problem. It is a problem. Here's the thing. It's a problem for the miners too, the current emissions policy or whatever proposal, or the original emissions, the current one, the one that's in right now, basically has the potential for the miners to run out of all of it, the network drop off, not have anybody mining it, fees not going to miners, the miners drop off, and you have a dead coin, and everything you mined is worth nothing. That's literally, like, as it sits right now, what the problem could be. What resolves that problem is the amount of people that start utilizing the network. Okay? The problem there is, according to their models, as far as I understand, which they can only see out 4 years, something like that, they wouldn't have enough to compensate as far as just fees to go ahead and pay the miners out. So from the miners' perspective, I do have to say that if you want to mine Ergo and you're going to mine it and hold it and you're going to hold it for long term, you do have that potential of basically Ergo ending up being a dead coin because the emissions, the initial emissions model is flawed. Now, here's where things get extra tricky, because when we talk about previous changes to monetary policy, especially when it comes to compensating miners, where we run into a you shouldn't be doing that. The problem I'm seeing here, though, is that we have a problem. I think it's broke no matter what, because you don't want to be changing emissions in general, right? You don't want to be doing that and making monetary policy changes if you can help it. But I feel like it just started off bad. I think that a 6-year an emission cycle that ended in 2026 was too young, and I think that should have been spotted earlier on. Now, maybe they were expecting enough network traffic through the Cardano Oracle, etc., to make it worth mining after that. And that could have been what they were modeling after. I really don't know. Now, what I'm going to be covering on the channel for you guys is how you can vote and you can make that decision. Here is what I would like to see in general, though. I would like to see a different, I think personally, and I'll talk to them about this, I would like alternatives to be softly proposed, just basic alternatives proposed before miners vote on EIP 27. And the reasoning is maybe somebody has a better idea of how to handle this. Does this need to be solved? Because for me, I feel like this needs to be solved if I'm looking at it from the economic portion of it, specifically like maintaining network security while also compensating miners fairly. And I don't think it works right now. So voting against EIP 27 feels like voting for the coin to die in 2026 to a certain extent. But if we have alternatives, or at least preliminary alternative ideas, then we would be able to say, okay, I'm voting against 27 because I think that there's a better alternate idea. And this is kind of where I'm at a loss as far as it all goes. What are the things that I've enjoyed about Ergo, of course, is the amount of development. Of course, the Ergo DEX for the decentralized exchange was stood up really quickly and functions well. I've utilized the Ergo auction house for NFTs, and that's functioned well. So things are functioning well from the DeFi and the contract aspect and so on, as far as all that goes. However, we're running into, it feels like the exact same problems that Ethereum was running into. The difference being, luckily here, is you have a couple things going for it compared to Ethereum when we start talking about re-emissions or changing of the monetary policy. Number one being is that miners get the vote and they are working on individual miner votes. I think that is super important to point out, because that puts it leagues ahead of Ethereum, okay, as far as this goes in general. The other thing that it has going for it is a supply cap, meaning that Ethereum doesn't have a supply cap, Ergo does. So as far as the economics go, it's not like they're going to be printing an infinite or minting an infinite amount of ERG that is going to possibly affect your mining profitability in the future if you were holding, right? These are the benefits to Ergo versus Ethereum, and what sets this particular issue, right, the monetary policy, this re-emission issue, separate from what Ethereum was doing, which is let's have all the holders, the hodlers, the ICO investors vote on something that reduces mining rewards for miners. This is at least miners voting for it in general. And like I said, to clarify, I do feel like a vote for no on EIP 27 as it sits, if nothing else was put in place, would be almost voting for a dead coin. That being said, I think that there should be alternatives addressed and thought out before we just ham fist in some sort of EIP right away. Hopefully that clears it all up and is objective as possible. I think that you can hear how reserved I am as far as like this project in general. It definitely isn't confidence inspiring. I would make that clear, but I do see the value in it, like we've talked about before, and I do see how it is intentionally being done in a manner that takes into account the miner's opinion. So those two things are definitely positives in my book from there. All right. So I have my reservations, but I also have the positives about the project. And I think I laid it out as best as I could. Now, none of this is financial advice. Also, make your own decision on how you vote for this. I'd like to hear you guys' opinions over here in the comments. So let's go ahead and get to questions and answers and comments and all of that. And thanks for all of the super chats. I'm going to scroll up and then we're going to get going from here. All right. Whew. All right. M. Hammer says 555. Hit that like button and keep the streams coming. I'm going to keep them coming. Keep the like buttons coming. And the donos, baby. The donos. Keep me alive in the bear market. All right. Hash and Dash, thank you for the $20. Appreciate the live streams. Blind Run, so to the moon. Let's do it, boys. Boys, thank you for that. Look at us making all the money. We're going over today because, unfortunately, guys, that's just the way it has to be today because we had a lot to talk about. Holy crap. All right, so I'm going to scroll down and start pulling out the questions. Ron Watkins wondering about Best Buy drops. There are a ton of different Discord notification bots that you can get into. And they will ping when stuff comes into stock. The great thing about Best Buy is when it pings for Best Buy, if you click it, you get in line in Best Buy. And that's a little bit better than the systems where you try to, the reason why the Best Buy drops are better online for ordering is because of that. While if you go try to do one through like Newegg, for example, the page is crashing and people are ordering and you never get it. So Best Buy drops are working. Use a stock drop alert for that. I recommend the Discord bot. I think there's also a Telegram bots, stuff like that. It'll just ping up and it'll go ding, RTX 3060 available at whatever, Best Buy or whatnot. I, for the most part, ignore the alerts for Newegg because I never get them. It doesn't work. So that's a little deal on the drops. Let's scroll down here. We'll get to some questions. Gunmu says that he suggests a slow cooker approach of bull and we will bottom for 90 days to create fear, then slow climb for at least 2 years. Do you think we'll climb back up? That's interesting. Oh. Raven Crash makes sense, by the way, guys, and I haven't actually looked at it, but I know some people were mentioning it. Because there was that price spike getting ready for tomorrow. And then, you know, if you're a miner and you've been sitting on Raven for a while, I'm just saying, like, from my perspective, which I sold mine at, like, whatever, when it was way up. What was that? Like, earlier this year. I think it was at like 20 cents or something. Ooh. Oh, I gotta plug my mouse in. It's dying. I was like, why is this not working? That's it. We killed the mouse. That's what I get for playing Halo last night. All right. Yeah, like if you're at like, where did it go to? 13 cents or something? I'm probably selling off as a miner at 13 cents before the halving. I don't know. This is what I'm thinking. Name Hammer. Yeah, I have your stuff. I haven't gotten to it yet. Ron Watkins, that's Tech. Are you going to be offering hosting opportunities for GPU rigs? Not at this time, man. This sounds like a lot of work. A lot of work. I'm honestly kind of struggling just keeping up with what I got going on right now. Latrell says, didn't you have some 6,600 cards mining Flux? Curious about the solutions in a second and what your overclocks were. I temporarily tried it, and then I moved it back to ETH for now. I will get on putting in the overclocks, though. I didn't overclock them. I just got the initial kind of numbers off of them, and then I tried them on Ton. But anyways. Flux hash rate goes up and down 30% every day, says Paul. Let's talk about that real quick. So Flux, I believe Flux is also... I believe that Flux has a deterrent, doesn't it? For a 51% attack? It has multiple deterrents. One is the nodes. Yeah, I don't think that there's any worry about a 51% attack. Because you're split in the block reward, validating the chain between nodes and mining 50-50. So you would have to have 50%, you'd have to have 51% of the hash rate and own 51% of the nodes. I don't think Magic Lucky that that's as much of a concern, to be honest. Yeah, and Gunmuse will be covering proof of vote for sure. All right, let's see what other questions we got here. Okay, here we go. All right, Detroit Irish says, at Son of a Tech, every time I hear ERG talk about EIP, I think of the government promising tax cuts after they spend and being a deposit type of system where you get out and you get out what you put in. No, I mean, and so this is the fair point, right? Is that's going into a contract that is presumably controlled by the devs. And what happens if they do decide that they have enough users in 2026 and they say, well, we're just going to use this to fund something else, and they pull everything out of the contract? That is a worry, right? And unfortunately, what we do have to worry about is it does feel extremely centralized. Raul Dixit said, ask Symantec why Ergo users not increasing. Is this because of Cardano underperforming and they made Chainlink as Oracle provider? I understand the project is young, but still ETH caught up in 5 years. Yeah, but Ergo is way younger than that, right? And I mean, Ergo Dex has how many tokens? Hold on, let's see. One, two, three, four, five, six, seven. 7 tokens. And the Cardano support hasn't gone in. And then, yeah. And then, like, if you look at that, the volume 24 hours is only 5.82 thousand. Yeah, so $5,800 every 20. And that's volume, right? So if you translate that to fees, that's not very good. If we went to, for example, we could get an idea probably if we went to Ergo, right? And then we looked at, like, let's say the hash rate right now at 15.82 terahash. Terahash to megahash or whatever. Where is that converter? Make this easier. Let's see if I can get an idea here, right? So if we look at, not that one. I have too many tabs, guys. There we go. If we look at this one, we say the hash power is 15.82 terahash to, and then, so we take that mega hash out, right? We go to what to mine. Ergo is Autolicos, right? This doesn't really matter. And we're looking at total generation. So we're looking at 24-hour generation of the total network of 210,000 ERG minted every day. And the total DEX only has 5,800 going on it. $5,800. Like that, those numbers are not anywhere close, right? So that's the inflation they're talking about. So like if mining ended right now and you're trying to base it off of like only getting fees, like there's not going to be enough fees in here to pay miners to secure the network at its current rate. It's just not possible. You understand like where that, you kind of see where that issue is? All right. We have a couple more super chats. Ben's 310, thanks for the $4.99. Thoughts on Flux lending out nodes to big companies in terms of being decentralized and the effects of lending. Is this in relation, and I haven't done the research yet, but there was the NVIDIA Flux partnership. God, today's stream's going to go forever, isn't it? Yeah, let's go ahead and get some information here real quick. So this is a new piece of news as well. It was 2 days ago, and let me get the super chats in, and then we're going to start here too. Brad Becker, thanks for the $9.99 super chat. And Polytech, thanks for the $2. Raven is launching RN Easy Wins. All right, cool. This has to be talked about as well. So Flux partners with NVIDIA to bring Web3 to the next level. Flux and NVIDIA's shared passion for innovation will make 2022 a landmark year for Web3. Flux has been accepted into the NVIDIA Inception program as a premier partner. Flux will be able to evolve faster through access to NVIDIA's cutting-edge technology and experts, networking events, and co-marketing support. I want to bring something up here just real quick These types of partnerships take forever, and light hash rate does not block Flux for mining, and NVIDIA had to be completely aware of the profitability of their light hash rate GPUs on Flux. So just another reason light hash rate is BS. Just saying, okay? Oh my God. They just want to hurt current miners. That's it. That's all they want to do. All right. Flux was created with the very purpose of innovating blockchain technology and developing the foundational technology infrastructure and tools for Web3. Web3 is an evolved decentralized internet that empowers users and delivers a whole new experience by leveraging technological breakthroughs such as blockchain, artificial intelligence, edge computing, and machine learning. So in the spirit of innovation, Flux is partnering with NVIDIA to share technology and ideas to build a better internet for everyone. Flux becomes a premier partner of the NVIDIA Inception program. NVIDIA is an industry-leading hardware and software developer. They revolutionized gaming by developing groundbreaking graphics processing units for 20 years ago. NVIDIA has a passion for innovation, which is why they created the Inception Partnership Program. NVIDIA Inception is a program designed to help technology startups evolve faster through access to cutting-edge NVIDIA technology and experts, networking events, and co-marketing support. Flux joins the NVIDIA Inception as a premier partner and will be supported by NVIDIA in developing the decentralized infrastructure needed to power Web3. This creates many joint opportunities for NVIDIA and Flux to accelerate the Web3 revolution. Flux already utilizes NVIDIA technology in the Flux computational network, as NVIDIA Jetson single-board computers can operate as nodes on the Flux network. We talked about this, I think, last week. This partnership will help Flux explore many more use cases for NVIDIA's groundbreaking technology in combination with the powerful decentralized Flux network. In addition, Flux will be able to access the vast expertise of NVIDIA's top engineers and developers to help further innovate and build the Flux technology. Flux will also have access to important networking events and co-marketing support in order to increase visibility and reach of Flux. Flux, the computational network that runs Web 3.0. Flux is an entire ecosystem tailor-made to provide developers with the necessary tools and infrastructure they need to build and host decentralized applications on Web 3. It operates a powerful decentralized computational network consisting of more than 2,600 nodes and leverages blockchain technology to create a truly decentralized infrastructure for Web3. Flux is entirely unique in the blockchain space as it is fully operational, multifunctional platform with a wide range of utility rather than a single use case project. The demand for Web3 infrastructure is ramping up and Flux is ready to deliver. The Flux network is capable of scaling to meet the growing demand and is positioned to play a central part in building a more decentralized internet. Flux has a passion for innovation and will not shy away from solving the shortcomings of current technology. Flux has already delivered on building a one-of-a-kind cross-blockchain bridge called Fusion. Fusion is an application in the self-custodial Zelcore wallet. Makes it possible to move assets between supported blockchains in a simple, secure, and fast way. It is pretty cool. Flux is also actively developing Proof of Useful Work, POUW, a solution to the environmental concerns plaguing proof of work. And this is going into my we need to research box. All right. A solution to environmental concerns plaguing proof of work mining in the blockchain. Instead of a blockchain mining being wasteful, Flux will implement a new mining algorithms and methods that will utilize the GPU hashing power to solve real-world problems such as rendering, deepfake detection, or training machine learning. Every day, quote, every day I wake up with a smile because I get to be part of building something that will make a positive impact on the world. Web3 powered by the Flux network. New exciting technology that will enable a better internet, empower users by reclaiming their private data, and further decentralization by transferring stewardship from internet infrastructure from centralized actors to people like you and me. We've talked about kind of like the problem of this before. I don't think I need to review it or rehash that out. I think you guys should know already. I'm thrilled that we can partner with NVIDIA so we can innovate faster and share ideas and grow. As a seasoned blockchain miner, I have a very special relationship with NVIDIA and its technology. They have some of the best techs, and now we can leverage that to reach more ambitious goals than we thought possible just a year ago. Building Web3 is not a competition, it is a joint effort to advance technology for the benefit of all. So we will celebrate a partnership with anyone who shares our dream and passion for Web3 and the decentralization of technology. So come join the Web3 revolution, and I guarantee you that you will wake up smiling too, end quote, comments Flux co-founder Daniel Keller. Come take part in the decentralized future. Flux is fueled by community, so we invite you to come and take part. All are welcome. It doesn't matter if you're just interested in technology, an investor, a developer, or just like to make crypto memes all day. Flux needs all kinds of people to participate. Come check out the website, blah, 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 blah. There you go. So there's a big partnership with NVIDIA. What I'm hearing from the chat was somebody's concern with, I guess, are they giving nodes? So they're giving a certain amount of Flux as part of the partnership to NVIDIA so NVIDIA can stand up nodes. Is that what I'm understanding is some of the controversy surrounding this? Either way, this is a pretty incredible deal. One, because it involves NVIDIA, who traditionally has been pretty hands off with crypto in the public eye, I think is the way to put it. So being put in the public eye and being like, okay, yeah, and we're going to partner with Flux, it's pretty incredible. If we're being completely honest right now, and you asked me what project is going to be profitable for GPU mining after Ethereum moves to proof of stake, I think it's Flux. If anything, it's Flux. They have the biggest partnerships. They have the parallel assets. They have the possibility of building nodes on top of that. It's Flux. And they're making the biggest waves, right? For a proof of work coin. Or what is now going to be proof of useful work, which sounds like kind of combining mining with like folding at home. Ooh, some really interesting things might come in from NVIDIA for this. Kind of exciting. All right. Help Son of a Tech with hashtags. Flux, what the flux? Flavortown resident says, I don't trust NVIDIA with decentralization. I think that I can understand a lack of trust there. Exactly what does a premier partner mean, I guess, would be the question, right? I think that they're the closest to Web3 from a VPS standpoint, where I still I take issue with how the nodes are run right now, but oh, so a corporate-owned decentralized network. You mean like Ethereum? Well, it's not like NVIDIA owns Flux. But yes, I think from the perspective of, does Flux have a governance centralization issue potentially? I think yes. Is that fair enough to say? Fair enough to say. Dre and Ravencoin halving couldn't choose a worse timing. I think they intentionally chose that halving. The developers knew the Bitcoin super cycle, and they intentionally put the halving actually probably the best time to put it, which is when you typically go into a bear market. I think that that was actually intentional and a good idea, personally. That's what I personally think. Professor Chaos, thank you for the 20 in the super chat. You guys rock today, man. We went long today. We covered everything. I guess real quick before I go, because we just are digging into this flux rabbit hole, should we figure out what this proof of useful work is real quick? This article was posted on August 28th, 2021. So I feel like I feel like I have the question. So you guys probably have the question. It's a 4-minute read. We're going to do that. I have another doctor appointment coming up here at 2. So in 40 minutes. So I'm going to read this real quick. Actually, after I take a sip here, we're going to get into it. Whew. I've learned so much today. It's insane, boys. Dude, I'm about to move all my NVIDIA rigs over to Flux. Seriously. I'm about to. And say, Flux it. You know what I'm saying? Professor Chaos, thank you for the $5. Hey, what is the point of holding parallel assets of Flux? You still don't get the point of them. They're just Flux. Like, it's the same amount. So when you get the parallel assets paid out, depending on the pool you're on, it either gets paid out as a token on a parallel chain. So ETH, Solana, whatever, still has the same value as Flux. You just bridge it over. Or in the case of like some pools, they do it for you and they just dump it into your Flux account and you just own more Flux. Basically, it's about 80% of the block reward. So basically take whatever your mining profitability is, and then you get 80% of that is coming from, or an additional 80% of that is coming from parallel assets. You're just getting paid Flux. That's all it is. You're just getting paid more Flux. The point of it is, just to give you an idea from the network's perspective, why this is incentivized, is it incentivizes people to utilize basically all of their cross chains. And what that does is essentially, well, if we're being honest, show up more in charts. It's better look for the entire community as a whole, right? That's the idea behind it, I think. As far as like, it's a good move, right? Plus anybody that's added like any sort of liquidity to any of those, they're going to get benefit off that. There's lots of stuff. Okay. Let's go ahead and talk about proof of useful work today. So Flux will pioneer the first proof of useful work blockchain. Flux aims to be the first blockchain to successfully implement proof of useful work to secure the Flux network. Instead of solving randomized algorithms, Flux GPU mining will be directed at solving real-world problems through distributed computing, such as machine learning, deep fake detection, and rendering for folding at home, and more. This innovation will make the Flux the first eco-friendly blockchain, while at the same time vastly bolstering the computational network resources of the Flux ecosystem. Innovation is the nature of Flux, and now Flux takes aim at yet another major innovation in blockchain, proof of useful work. Recently, Bitcoin, Ethereum, and other proof of work blockchains have come under fire for being harsh on the environment. Even the UN has concerns about the environmental implications of proof-of-work blockchains and is seeking solutions, as they also view blockchain technology as a potential driver of sustainable development. To do proof-of-work, a crypto miner usually runs one or several GPUs to do the necessary randomized calculations required by the network. This consumes energy, and thus it has an environmental impact. While that impact can be and is mitigated by the use of renewable energy and more modern hardware, there is no denying that proof of work is wasteful, as the energy expended has no use other than securing a blockchain. Proof of useful work, POUW, is the solution to this. POUW, proof of useful work, is a concept where the GPU miners can secure a blockchain by solving real-world problems rather than random ones. For instance, the work needed could be training a machine learning or AI algorithm, animation or visual effects rendering, or protein folding, such as with folding at home. With the proof of useful work concept, no energy is wasted as the computational power of the GPU miner is put to good use. The concept of proof of useful work has been explored by several academics, and many theoretical implementations have been suggested. However, we have yet to see it successfully implemented in a real blockchain. Flux aims to change this. Flux will pioneer the first proof of useful work blockchain. Flux has always been about innovation and bringing new ideas. We already read that. A good example is Flux Fusion and Zelcore. We already know about that. That combined to create unparalleled platform for decentralized finance, empowering crypto holders to easily swap between 10 blockchains and make for the most of their investment. In order to keep pushing the boundaries of blockchain technology, Flux will now set its sights on proof of useful work. Flux will pursue proof of useful work for two main reasons. The first reason is that Flux feels obligated to embrace the criticism of proof of work and actively work to improve any flaws in the system. Flux believes that if you are not evolving, you are falling behind. The scientific community has proposed proof of useful work as a valid solution to the environmental downsides of proof of work, and Flux will commit it to implementing this. The second reason is that Flux decentralized computational network can massively improve its capabilities by adding the GPU compute of the Flux miners to the network. By pointing the mining GPUs toward real-world distributed computing tasks, Flux will strengthen the network capabilities as well as adding new use cases. For instance, the community mining pool, fluxpools.net, has more than 400 GPUs at the time of writing this, mining Flux. That's a lot of power and resources to be tapped for the network. While implementing a proof of useful work will be challenging, Flux technology is capable of doing it. As Flux continues to develop this concept, more will be shared with the Flux community. Naturally, the Flux implementation of POUW will be designed in such a way that it won't disrupt the current incentivization of Flux miners and node operators. More likely, it will probably provide an opportunity to create further incentives as the network performance can be more efficiently utilized. This is a lot, guys. I lost it. We went too long. All right, I'm going to finish this up and then we're done. Oh. Whoo. Naturally, the Flux implementation. Okay. Here we go. The efforts will be led by senior developer Jeremy Anderson, aka Blonde Frogs, who has extensive experience in blockchain development and implementation. Jeremy, I feel like he kind of like Blind Run, Blonde Frogs. Come on. Come on. Jeremy was the lead developer for Ravencoin and other projects in the past and is looking forward to the challenge. He's now dedicated to helping the Flux team move forward with this exciting innovation. I didn't know that Mr. Jeremy Anderson was doing this. This is good. This is really good. Just saying. Daniel Keller, co-founder of Flux, stated, quote, "Whatever is wrong with proof of work, we'll flux it." Flux is dedicating the required developer resources and will pioneer the first implementation of proof of useful work in blockchain. Daniel continued, quote, by doing this, Flux will push blockchain technology forward by solving one of the major downsides to proof of work, vastly increase the Flux network resources by adding GPU compute, create new use cases, and provide more value to Flux holders, miners, node operators, partners, and clients. As always, stay informed on the website. There's the hope for GPU miners. Flux is our only hope. Is it Flux? I think it's Flux. I said that. I tweeted that a couple weeks ago. And the more I look at it, I'm like, is it Flux? I think it's Flux. I think it's flux. Are you a GPU miner? Are you worried about ETH 2.0? What are you going to mine after ETH 2.0? I think it's flux. The answer is flux. Will it be profitable enough to sustain your power costs? Well, that's up to your geographical location, I suppose. I will see you guys next Tuesday, which is tomorrow. 9:45 a.m. tomorrow, 10:45 a.m. Central Time. I don't have any doctor's appointments or anything, so we'll be doing that. I'm off to the doctor again. I feel like I got a ton of doctor appointments the last couple of weeks. Hopefully we'll figure out what's going on with my toe, and I'll get feeling back in it, and then we'll get back in the gym. I'm going to hit the sauna today too. I feel like I have a ton of work to do for the YouTube channel. I'm trying, but I also feel like I'm falling way behind, especially with the personal life stuff. So I'm just going to keep waking up and keep doing it. I hope you guys show up. Thank you guys for being here. Keep your head up. Keep calm. Mine on. Get a shirt. I am going to be inverting the colors. Hopefully this week. I'm thinking tonight, if I have some extra time, I'm going to be inverting the colors. So we'll have the white keep calm mine on a black shirt, because that was requested. I will see you next Tuesday.